Hi everyone, it's Eric here and wanted to do another video for you on solar systems and return on investments, or ROI. Created this video to show you how to calculate and determine just how much money you put into a solar system and when you'll get that money returned to you based on tax credits, depreciation, and money you get from the electrical company for electricity that you put into the grid. For this example, in this video, I'm going to use a 4,000 watt solar system, or a 4 kilowatt solar system. That's typical for a lot of residential or commercial installations that I've done, or typically across the United States. It's usually around 25 to 35 solar panels. Not too bad. That typical installation can be done in 1 to 2 days by a professional team, or with my company, anywhere from 1 to 3 days. Typical person that does a DIY system, you'll notice the picture in the lower left, that's a DIY system that I've put together. So that system, that's taken a period of several years just adding, tinkering with that system. So it can really depend on your money that you invest in the system and your return on investment based on, again, the depreciation, how you set up the business, if you have a battery backup system, if you have a wind turbine, and so forth. I do cover some of those examples in this video. The middle picture is a battery system, and the right side, bottom right picture is a picture of me installing a 5 kilowatt solar system. So that was a 5,000 watt solar system, but typically it's around 4,000 to 5,000 watts, or 4 to 5 kilowatts. All across the United States, including Hawaii and Alaska, all 50 states, have a federal 30% tax credit on the total cost of the solar or wind system. Whatever total cost, if it's $10,000, if it's $100,000 for your system, you get a 30% federal tax credit no matter what. Additional tax credits can apply in certain states. North Carolina, where I'm doing a lot of solar installations, has a 35% state tax credit. So that's really important. A lot of businesses like that, so they will invest in solar because the 30% adds on top of the 35%, so you get 65% in tax credits. Also, equipment can be depreciated, which means the cost of the equipment, or the value of the equipment, can be written off on taxes. A lot of companies make use of this and love that for solar. So the way that works is, if you're typically a limited liability corporation, or LLC in certain states, sole proprietorship, if you're incorporated, a business can take that value after you take away all the tax credits, take whatever value is left over, and then depreciate that value over a period of 6 years. And the IRS has a certain way that you depreciate over a period of 6 years. And I do have that later in this presentation. I do show you how that's done. So with the tax credits, let me give a quick example, the one I'll use in this presentation. Let's say you install a system and you pay the solar installer, or you pay $10,000 to install the system. 30% federal tax credit, $3,000. So the cost of the system after the tax credit is $7,000. So you can depreciate $7,000 over a period of 6 years of the solar, including the batteries, the wind turbine, whatever you have in your system, whether it's off-grid or not. And also, I do have a disclaimer at the bottom. Please do check with your accountant or tax attorney to see what incentives you qualify for. Always want to double check, and that's what we've done and we recommend for all of our customers. Check with your accountant or tax attorney to determine how you can get this to work for you, what incentives you qualify for, and also what states, depending on where your business or your home is. That really does depend on what incentives you get. Alright, this example, 4,000 kilowatt solar system for $10,000. 30% federal tax credit applies to both the businesses and individuals. And again, if a solar system costs $10,000 times 30% of that, $3,000 tax credit that can be applied toward your taxes. And businesses can also apply depreciation on top of that, where they can depreciate the value of the solar system over a period of 6 years. Okay, so this is a just kind of a synopsis of what I just said. We're using 4,000 watt solar system, $10,000. That's about $2.50 per watt, which is a pretty good deal for a solar system. You get a $3,000 tax credit. Businesses can depreciate 70% of the total value if you just have the 30% federal tax credit. For example, this would be if you're in Georgia or Florida, where only the 30% federal tax credit exists. So after the 30% federal tax credit is taken by, if you're an individual or a homeowner or a business, that applies for both, you have 70% left over. So businesses, example, limited liability corporation or an LLC, can depreciate 70% of that total value. So if you're an individual and you're putting solar on top of your house, it's recommended that you form a business, that you form an LLC. Go ahead and register an LLC under your name. Usually an LLC has better tax benefits than a sole proprietorship, which is a different type of business and corporation. But you, again, check with your tax attorney or your CPA, certified public accountant, to determine what is best for you. What happens is most people that we install solar on form a business with the help of their tax attorney, CPA, accountant, for instance, and they'll form an LLC, which is almost 100% of the time. They'll form an LLC, and that way you can make use of not only the federal tax credit, but you can use the depreciation and transfer it personally. And I do have a graph in this that kind of shows that, and that's this right here. So let's say you form an LLC. I'll call my LLC Eric Solar LLC, and I'm a homeowner. Okay, I'm installing a do-it-yourself solar system. You'll notice on the top the 30% federal tax credit will apply. The state tax credit, if applicable, if I was in North Carolina or another state that had its state tax credit, and also the depreciation can apply to my limited liability corporation. And you'll notice I can transfer those if I'm part of that LLC. I can transfer that to another LLC that owns Eric LLC, or if I'm is part of my individual taxes. I was going to use an example. Before I started my solar company, I was a mechanical engineer. So I could take my personal taxes from being a mechanical engineer, 25% to 35%, whatever that happened to be, and I can take my depreciation and tax credits from Eric Solar LLC and transfer it to my private taxes, my personal taxes, and you'll see that individual taxes. And again, you want to pay some extra money to probably have a CPA or a tax attorney do that for you. And again, that is a few extra dollars to form an LLC. The cost to create a business, Florida and North Carolina, I'll use those as an example, $120 to $100. And picking an accountant or tax attorney to help you set this up and explain to you any further details, that can cost anywhere from $150 to $500 depending on the consultation or whatnot. But the more money that you put into a system, $10,000, $20,000, $30,000. I've seen personal systems, residential systems as high as $60,000 for a ground mount. You will qualify for a lot of depreciation that you can write off per year and transfer that to personal taxes. And you can have an accountant, CPA, or tax attorney really help you with that. And that's extremely, extremely important that you link up and look into this. And that way you can make use of that depreciation. And again, you have to be part of that LLC to transfer it to your personal taxes. Now, installing the solar, you do have to make sure in some states, even if you do it yourself, if it's a DIY solar system, that you're certified to install solar. Some states, just a handful, Colorado, California, Florida, for instance, are just states that require their own license, that you have to be certified to install solar. The most common license that people go for, take the class and then take the licensing, is called NAPCEP. In Florida, there's also another one called FSEC. Florida Solar Energy Center. The NAPSEP is also very popular. You take those courses, get certified, and then you take a state licensing exam. That's several hours long usually. The one in Florida that I took was maybe 1 to 2 hours. You take that one, get certified, and you'll be able to install solar. But most states don't require that, so you could do your own DIY, and then with the help of a CPA or tax attorney, apply on the IRS portal, on the IRS website, to get that 30% federal tax credit, and they'll usually do that for you and apply depreciation for you, and do all of that. Now, the next step for an ROI, return on investment, is we're going to use a website called PV Watts. Now, PV Watts is a very popular tool. It's from the National Renewable Energy Lab, and we're going to use that to calculate the yield on location. So there's the website, pvwatts.nrel.gov. Now, there's 3 different versions of PV Watts. Most versions will work. The most recent version, which I've used in this presentation, is a really awesome version. They've taken a lot of data. You input a lot of data into it based on your solar system, and it will output how many kilowatt hours you're producing, and also how much money you'll make based on the orientation, whether your solar panels are tracking, and how much you're paying to the electric company, whether it's 11 cents per kilowatt hour, 12 cents per kilowatt hour, and so on. So if you go to this website and you click on PV Watts, you want to find your location. Usually there's a bar right at the top, and for this example, I actually used Atlanta, Georgia, to determine the yield of this particular example, the 4,000 watts or 4 kilowatt solar system. I always use 0.8 as my, quote, D-rate factor. What a D-rate factor is that determines how efficient your system is. A lot of professional solar installers use 90 to 95%, I've seen. That's not entirely accurate. Usually the system will be 85% to 95% efficient at the most when you add up all the inefficiencies. Even if you do a great job, 95% is really pushing it. For all intensive purposes and calculations, I use 80%, so 0.8 you'll see in PV Watts. And also it asks for the installed cost. It'll kind of give you a return on investment as well. $10,000 example, 4,000 watts, $2.50 per watt cost. Now here is the PV Watts calculator. You'll notice that it asks you a lot of information, so this is the input screen, and I'll go one by one. Again, at the very top, Atlanta, Georgia, and you can change location anywhere in the United States. System info, DC system size, that's direct current size, in kilowatts, and we have 4 kilowatts. Make sure you don't put 4,000, that's not watts. So make sure that's 4 kilowatts. The array type is fixed, not open rack. I'm sorry. There are a couple other options. You have tracking, roof mount. There's some other options. For this, we're just going to use fixed because that's the most common. Is just a fixed system. DC to AC D-rate factor, and here it's standard to 0.77. Tilt degrees, it automatically defaults to what a solar panel should be tilted at Atlanta, Georgia, and you can put 33.7 degrees. Now, if you're doing this system yourself and you know what the angle of the roof is on your house or what angle you're building a ground mount on, go ahead and put that correct angle because that's really important when you're calculating your solar yield. Also, the DC to AC D-rate factor, I think I left it at 0.77 for this, 77%, so it's even more conservative than what it needs to be. Azimuth, 180 degrees means due south, so you want to determine what angle are your panels facing. So PV Watts will actually calculate. If you look off to the right, it'll go draw your system. So if you draw your system, you click on that, and you can kind of highlight the areas of where you're going to put solar. And what PV Watts will do is look at the angle, and determine your azimuth for you. Now, you want your solar panels to always face south no matter what. You never want them to face north because they'll obviously get no sun. But you can also have the option of putting them on the east side or west side. And so the azimuth is very important, whether it's 90 degrees. Well, 90 degrees would be straight up, so you don't want that. But say like basically different angle, so you can definitely calculate that. Initial economics at the bottom, and you can do system type. I like to keep it residential in this case because residential is a little bit lower electric rates, and it'll default to what it thinks the local, based on data that PV Watts and NREL already have, it'll default to the average cost of electricity produced from the utility for electricity that's sold to residential, because residential usually has cheaper rates than commercial, so you have two options, residential or commercial. And the average cost, I put about 13 cents because that's what it defaulted. And again, initial cost, money per watts DC, that's what that means, $2.50 per watt, because again it's $10,000 divided by 4,000 watts. Alright, and after you click calculate, you'll see that it comes up with, hey, this system at 77% D-rate factor produces 5,380 kilowatt hours per year, and it will give you a print. You can print this, and it gives you by month the solar radiation, the AC energy in kilowatt hours, and that energy value. So how much money you're actually producing per day based on this 4,000 watt system in Atlanta, Georgia. So your annual at the bottom, that's where you want to go. Your solar radiation average is 5.18 kilowatt hours per meter squared per day. Therefore, you produce 5,380 kilowatt hours. And based on that 13-cent figure on the previous page, we will save we will produce or save $699 with this system. And obviously this should be a little bit higher because again we use 77% D-rate factor, and also the price of electricity is going up significantly all over the United States, especially with the recent coal episode with Congress and the EPA requiring coal plants to be a little bit cleaner. So anything coal related for electricity is going to go up. So that's a fact. It's probably going to increase on average about 1 to 2% per year with extra costs. So that's probably going to go up. And also, I know this is just a screenshot, but if you were to scroll down, you'd actually see a summary for Atlanta, Georgia, and some more return on investment calculations that they do for you. All right. Now, knowing this, again, the 4 kilowatt solar system will produce $699 per year. There's a $10,000 total cost of the system minus $3,000 from the federal tax credit. So again, $7,000. $7,000 divided by $699 produced per year, which means an ROI, a return on investment, of 10.01 years, or about 10 years. And again, this does not factor the price of electricity will rise at least 1% per year or more. Now, this is the important part. The depreciation that you can apply to a business is called MACRS, or MACRS. I've heard it pronounced MACRS and MACRS, or MACRS, depreciation schedule. The IRS was a little weird how you depreciate over 6 years. And so again, you want to consult with your tax attorney, your CPA, your accountant, someone that knows or is licensed to help you with this. But this is what happens with a business or LLC with that remainder $7,000 from our previous example. So after all the tax credits are done, you're left with $7,000, so you can write off the value. So solar again has very weird values over a 6-year period of what you can depreciate. In year 1, you're only allowed to depreciate 20% of that $7,000. Year 2, 32%. Year 3, 19.2%. Year 4, 11.44%. Year 5, 11.55%. And then year 6 is the rest, 5.7%. And I put the values right there, which add up to $7,000. So again, the summary is the system ROI can actually be 7 years or less with the MACRS depreciation, tax credits, and producing electricity. Now the wind turbine will actually speed up this ROI in a shorter time. Wind turbine is interesting because when you compare it to a solar panel, you know that a solar panel is only producing anywhere from 5 to 8 hours a day maximum. Okay, 5 to 8 hours a day. Whereas a wind turbine can produce 24 hours a day, 7 days a week in wind, sun, rain. So a wind turbine's a little bit different. Usually a wind turbine, based on what I've seen, can produce the output of maybe 3 solar panels to 4 solar panels, depending on how windy. I've done some some wind turbine installations in Florida, and we determined that a wind turbine can be equal to about 3 solar panels, 3 equivalent solar panels. So adding a wind turbine really changes the economics, but you have to be absolutely sure that you have wind in your area. We've seen wind turbines being installed where there's absolutely no wind. It's never spinning. It's not even equal to the electricity output of one solar panel, and a wind turbine is about 3 to 4 times the cost. Actually 5 times the cost, depending on the type of wind turbine that you get versus one solar panel. So a wind turbine is a very expensive investment, but if you have wind, it is a very good investment. Now batteries are also difficult to calculate because they're very expensive. It's usually $200 per battery, and you usually need about 20 to 40 batteries to really have an off-grid system. So that really does add up. You're going to spend $2,000 to $10,000 in batteries, maybe in that range. So it really depends on how long you're off the grid. If you're off the grid all the time, then it's a totally different ROI, return on investment calculation, because then you have to compare how much the total cost of the system is and how much your system is producing. So battery really depends on if you want to be off the grid part of the time, if you want to be off the grid all of the time. Really depends on what you'd like to do. If you'd like to just offset some of your electricity costs, then you need more specific information from your system to determine the return on investment. Alright, well, I do hope this presentation was helpful. If you have any questions, please leave a comment, and I'll go ahead and answer it as soon as I can. And I hope you enjoyed this, and thank you for watching.